Most people spend their entire lives trading their limited time for a paycheck, trapped in a cycle where their standard of living is strictly capped by their hourly rate or monthly salary. However, there is a profound psychological and physical shift that occurs when your investment portfolio begins to generate more monthly income than your actual job, effectively decoupling your survival from your labor for the first time. This is not just about having extra spending money or reaching a specific number in a bank account, but rather about the fundamental rewrite of your daily reality, where work becomes an elective choice rather than a mandatory requirement for existence. By understanding the mechanics of cash flow, compound interest, and strategic asset allocation, you can move from a state of financial fragility to a position of absolute sovereignty. Today, we are breaking down exactly how reaching this tipping point alters your mindset, your health, and your future trajectory, providing a roadmap for anyone ready to stop working for money and start letting their money do the heavy lifting. Part 1: The psychology of the tipping point. The moment your investment returns consistently exceed your active income marks a profound shift in your cognitive framework regarding survival and labor. For most of your life, you have likely viewed money as a direct byproduct of your physical or mental presence at a desk or job site, creating a subconscious link between stress and sustenance. When the math finally flips and your capital does the heavy lifting, that link is severed. This tipping point triggers what psychologists often call an internal locus of control, where you no longer perceive outside forces like bosses or economic downturns as the primary arbiters of your well-being. You begin to see your portfolio not as a static pile of cash, but as a living, breathing employee that never sleeps and never asks for a raise, which fundamentally lowers your baseline cortisol levels and opens up mental bandwidth for higher-level creative thinking. Transitioning through this phase requires a disciplined recalibration of how you perceive risk and security. In the beginning, many investors feel a sense of guilt or disbelief when they realize they earned more in a single market rally than they did during a 40-hour work week. This is because our society deeply reinforces the idea that income must be earned through struggle. To truly take action and benefit from this shift, you must move toward a mindset of abundance, where you recognize that your previous labor was simply the fuel used to build the engine that is now running on its own. Reaching this stage allows you to make decisions based on long-term optimization rather than short-term desperation, which is the exact moment when you start making your most profitable financial moves, because you are no longer afraid of losing your primary source of survival. From a practical standpoint, understanding this psychological tipping point is the key to preventing self-sabotage during market volatility. When you know that your lifestyle is fully supported by your assets, a market dip is no longer an existential threat to your grocery budget, but rather a temporary fluctuation in the valuation of your personal business empire. This clarity enables you to maintain a stoic approach to asset allocation, staying invested when others are panicking. For those currently working toward this goal, the most valuable takeaway is to visualize this crossover point daily. By treating your investments as a secondary salary that is slowly growing to overtake your primary one, you create a tangible roadmap that makes the mundane act of saving feel like a revolutionary act of reclaiming your future time and mental freedom. Part 2: Breaking the chains of the 40-hour work week. When your investment income begins to challenge your salary, the traditional 40-hour work week transforms from a mandatory life sentence into a professional choice. The standard American employment model is built on the exchange of time for a fixed amount of dollars, a linear relationship that fundamentally limits your earning potential to the number of hours you can physically stay awake and productive. By shifting your focus toward income-producing assets, you are effectively buying back your time in blocks. For every dollar your portfolio generates without your physical presence, a corresponding minute of your life is liberated from the necessity of labor. This transition is critical because it breaks the cycle of exhaustion that prevents most people from ever building true wealth, as you finally have the energy and clarity to look beyond the next paycheck and start thinking about generational prosperity. Taking action to break these chains requires a deep understanding of the difference between active and passive cash flow in the context of the U.S. tax system and inflation. For an intermediate or advanced investor, this means moving beyond simple savings accounts and into high-yield dividend stocks, real estate syndications, or index funds that provide consistent quarterly growth. The goal is to reach a level of mathematical certainty where your cost of living is covered by the natural yield of your assets. Once you realize that a 40-hour work week is merely a tool for capital accumulation rather than a permanent lifestyle, your relationship with your employer changes. You gain what is often called the power of walking away, which paradoxically often leads to better professional outcomes because you are negotiating from a position of total financial strength rather than desperation. To implement this change, you must rigorously calculate your hourly freedom rate, which is the amount of passive income you need to replace 1 hour of your traditional job. As you strategically deploy your capital into the market, you can start to see your dependency on the traditional work cycle dissolve. This is not about being lazy or avoiding work entirely, but about reclaiming the sovereignty over your schedule. When you are no longer forced to trade 40 hours of your prime energy every week just to keep the lights on, you can redirect that effort into high-leverage activities that can further accelerate your wealth. This creates a powerful feedback loop where your freedom generates more wealth, and your wealth generates more freedom, ultimately rewriting the rules of how you spend your days and how you define your value in the modern economy. Part 3. Strategic reinvestment versus lifestyle creep. The most dangerous obstacle you will face once your investments start to rival your salary is the temptation to immediately upgrade your standard of living to match your new total income. Lifestyle creep is a silent wealth killer that occurs when your expenses rise in tandem with your earnings, effectively keeping you on a higher stakes treadmill where you are still dependent on every dollar coming in. To truly rewrite your lifestyle, you must maintain a wide gap between what you earn and what you spend. By choosing to live on a fraction of your total income, you allow the excess capital from both your job and your portfolio to flow back into the market. This creates an accelerated compounding effect where your money begins to double and triple at a rate that is mathematically impossible for someone who consumes their gains as they go. Taking action in this phase requires a rigid system for capital allocation that prioritizes the purchase of more assets over the purchase of more liabilities. For a serious investor, this means viewing every dividend check or rental payment not as a reason to buy a luxury car or a larger home, but as a seed that must be planted to grow the next harvest. You should aim to automate this process by setting up a system where investment returns are funneled directly into new positions before they ever hit your checking account. This psychological barrier helps you stay grounded in your original lifestyle while your net worth skyrockets in the background. The goal is to reach a level of wealth where even a significant market downturn does not affect your daily bread because your reinvested surplus has built a massive buffer of safety. Strategic reinvestment is what separates the temporarily rich from the permanently wealthy. While the beginner focuses on how much they can spend today, the advanced investor is focused on the velocity of their money and how quickly they can expand their asset base. When you successfully resist lifestyle creep, you are not depriving yourself. You are buying future insurance against ever having to work again. You must realize that true status in the financial world is not found in the logos you wear or the car you drive, but in the number of hours you own. By keeping your overhead low while your investment income grows, you shorten the time frame to total financial independence by decades, allowing you to eventually enjoy a luxury lifestyle that is funded entirely by your assets rather than your life force. Part 4: Risk Management and Protecting Your New Reality. As your investment income begins to surpass your salary, the priority of your financial strategy must shift from aggressive accumulation to sophisticated wealth preservation. When you are reliant on your portfolio to fund your daily life, the impact of a significant market drawdown is no longer a theoretical loss on a screen, but a direct threat to your lifestyle. Protecting this new reality requires a multi-layered approach to risk management that includes maintaining a robust cash reserve, often referred to as a sleep well at night fund. This liquid cushion should ideally cover 12 to 24 months of living expenses, allowing you to avoid selling assets during a market bottom. By insulating your immediate needs from market volatility, you ensure that your long-term compounding remains uninterrupted even during the most turbulent economic cycles. Advanced risk management also involves deep diversification across asset classes that have low correlation with one another. Relying solely on a single index fund or a handful of tech stocks creates a single point of failure that could jeopardize your financial independence. To take effective action, you should analyze your exposure to different sectors, geographies, and investment vehicles such as physical real estate, treasury bonds, and private equity. This structural diversity acts as a shock absorber for your wealth. Furthermore, you must address the often overlooked risk of personal liability by securing comprehensive insurance policies and potentially utilizing legal structures like trusts or limited liability companies. These tools are designed to shield your assets from unforeseen legal challenges or creditors, ensuring that the wealth you have worked so hard to build stays within your control and continues to support your lifestyle. The final layer of protecting your investment-driven lifestyle is the constant monitoring of your withdrawal rate and its relationship to inflation. A common mistake for those who have just beaten their salary with investments is failing to account for the eroding power of rising prices over several decades. You must ensure that your portfolio is not just yielding enough to cover today's costs, but is also growing fast enough to maintain that purchasing power in the future. This involves a dynamic spending strategy where you adjust your outflows based on market performance, pulling back during lean years and staying conservative during bull markets. By treating your portfolio with the same rigor and oversight as a professional fund manager, you transform your financial independence from a temporary milestone into a permanent fortress that can withstand any global or personal crisis. Part 5: Designing a Life Driven by Purpose, Not Necessity. The final transformation that occurs when your investments beat your salary is the total shift from survival-based decision-making to purpose-based living. Throughout most of human history, the primary driver of behavior has been the need to secure food, shelter, and safety, which in the modern era translates to the pursuit of a paycheck. When that necessity is removed through a self-sustaining portfolio, you enter a psychological territory that few ever reach, where the question is no longer what you must do to survive, but what you want to do with your limited time on Earth. This transition requires a period of deep introspection and intentional design, as many people find that their identity is so closely tied to their professional output that they feel a sense of void once the financial pressure disappears. To truly master this phase, you must begin to view your time as your most precious non-renewable resource and treat your daily schedule as a canvas for activities that provide genuine meaning and social impact. Taking action to design a purpose-driven life means auditing your current activities and ruthlessly eliminating those that were only performed for financial gain. For an advanced investor, this might mean transitioning from a high-stress corporate role into a consultative position, starting a non-profit organization, or finally pursuing a creative endeavor that was previously deemed too financially risky. The key is to use your financial independence as a platform for higher leverage work that solves problems you actually care about. Because you are no longer constrained by the need for immediate compensation, you can afford to take the long view on projects that might take years to yield results, whether those results are social, intellectual, or even further financial gains. This shift in perspective often leads to a state of flow and satisfaction that is impossible to achieve when you are constantly looking at the clock and waiting for the workday to end. Ultimately, rewriting your lifestyle through investments is about achieving a state of total alignment between your values and your actions. Most people live in a state of cognitive dissonance, spending their days doing things they dislike to fund a life they are too tired to enjoy. By crossing the tipping point where your capital sustains you, you gain the rare privilege of integrity, where every hour of your day can be spent in accordance with your true priorities. This might involve spending more time with family, improving your physical health through rigorous training, or mentoring others on their own path to financial freedom. The ultimate goal of the Sam Invests philosophy is not just to have a large number in a brokerage account, but to use that number as a tool to build a life of contribution and legacy. When you finally reach this stage, you realize that the greatest return on your investment was never the money itself, but the absolute ownership of your soul and your future. Reaching the point where your investments outperform your salary is the ultimate milestone in the journey of a modern investor, representing the moment your money officially takes over the burden of your survival. We have explored the psychological shifts, the tactical reinvestment strategies, and the vital risk management needed to protect this new reality. But the most important step remains your own consistent action in the market. This financial rewrite is not a distant dream for a select few, but a mathematical certainty for anyone disciplined enough to prioritize assets over liabilities and time over status. As you continue to build your portfolio and refine your strategy, remember that every dollar invested today is a worker hired for your future freedom. If you found this breakdown valuable and are ready to take full control of your financial destiny, make sure to subscribe to Sam Invests for more deep dives into the mechanics of wealth. I would love to hear from you in the sections below, so please leave a comment with the phrase "time is wealth" to let me know you are committed to the journey, and tell us which part of your lifestyle you are most excited to rewrite.